Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by Austral Asset Management. It's Friday, the 24th of February, and we have David Kuo, founder of the Smart Investor in Singapore, as our guest today. David, good afternoon.
Hey, Salamat tengah hari, Brian. It is Friday, not Thursday. Yep. So
Yes.
we'll have to see how the markets are doing today. Yeah.
Well, lots of things happening, David. But before we get your insights, let's take a look and see how markets across the region are performing. We start with cryptocurrency. Bitcoin is at 23,948. It's down 2.32%. Ethereum is at 1,647. It's down 1.38%. Looking across the regional stock markets, we start with the SGX, close to home for you. It's up 0.43%. Bursa Malaysia is down 0.52%. Shanghai is down 0.74%. ASX All Ordinaries is up 0.16%. The Nikkei is up 1.12%. The Hang Seng is down 1.37%. And rounding up the numbers, we've got the Kospi, which is down 0.64%. David, your views on how markets are performing the first half of the day?
A bit of a mixed bag again, and I think everybody will be looking for some key American economic data. Japan is an interesting one because it appears that the new central bank governor is going to be easy in terms of monetary policy. So he doesn't particularly mind if the yen were to weaken slightly, and he's going to keep interest rates relatively low and also keep on pumping more yens into the market. So Japan investors are reasonably happy with that. But I think for the rest of the markets, everybody will be, as I said, looking for some really important American data coming out later on tonight.
Yeah, so with that PCE data that's coming out later tonight, is that also that conversation will also evolve around, is America heading for a hard or a soft landing?
Quite right. And that PCE data is the one that is preferred by the Federal Reserve. It gives you some indication as to what the inflation rate in America is going to be. Anything with a 4 handle, 4 point something, will be relatively cheerful for the market. Anything with a 5 in front of it, I think will worry the market a little, because it means that the Federal Reserve will continue to increase interest rates and maintain those interest rates for a longer time. With regards to whether or not we're in for a hard or a soft landing, Brian, I think the landing that I quite like is a long landing. I was recently in Hong Kong, and all I can say is if a plane goes in for a long landing, I'm going to be worried, right? I don't mind the plane coming down fast and it's bumpy. I don't mind the plane coming down slowly and it's a bumpy. But what I don't want is a very, very long landing where the pilot says, we're about to enter Changi Airport. And an hour later, the plane has still not landed yet. And I think this is what is worrying the market. Is the Federal Reserve going to be in for a long landing? In other words, it's going to take a long time to wring inflation out of the system. And it appears that way, which is why that PCE data is so important today. Because if inflation is going to be embedded and is going to actually be in the American system, then I think we could be in for higher for longer or just a very long landing, Brian.
Now, David, you were talking about getting to Hong Kong. What was the reason for you being there at that time?
Well, there are two reasons. I mean, I had some administration work to do in Hong Kong, but the other reason why I went was to go and see how my investments are doing. So I have investments in companies like Jardine Matheson, Mandarin Oriental, Hong Kong Land, Dairy Farm, Link REIT. The list is quite long. And I really wanted to see how the Hong Kong economy was performing. And on that point, I say to people quite often, if you are invested in the company, sitting at your computer, looking at charts, looking at numbers doesn't really tell you anything. You need to go and have a look to see how those companies are performing. And it was quite enlightening to go into the central district of Hong Kong and seeing many of the Hong Kong Land properties. I mean, it owns swathes of properties in the central district, and most of those offices are full. And when I had a look at some of the shopping centers, and they come under the Wharf REIT umbrella, and they're relatively busy. So many of the companies that I invested in look okay. So it gives me a confidence that the investments that I have made in those businesses, despite what happened during the pandemic, when unfortunately a lot of companies couldn't pay out the dividends, couldn't do anything, they are reviving. So it is very important for anybody. If you're invested in REITs in Malaysia, REITs in Singapore, go and have a look at how the offices are doing. If you get a chance, speak to the people there and ask them, how does it feel to be in the office again? Go and have a look to see how the shopping malls are doing. That will tell you more than any numbers, that the chief executive or the chairman is going to put into their annual report. There is nothing quite like a bit of shoe leather to go and see how things are performing at the moment, Brian.
Now, David, you mentioned Malaysia. Today is budget day in Malaysia, budget 2023, which is the first budget from the new government that's out later this afternoon. What are your expectations as an investor from this budget?
Well, let me throw the question back at you, Brian. Are you frightened? Are you going to be encouraged by what is going to come out in this budget? What is your feeling?
Optimistic, definitely.
I think a lot of people are fairly optimistic, but I think, the Prime Minister, Anwar, has a difficult task. Following the last budget, which hasn't been passed, that was pretty much a giveaway budget. But I think this time, there is going to be some kind of fiscal prudence. I think he understands that debt to GDP in Malaysia, which is running above 60% at the moment, is tolerable. It's not as bad as some economies, but I think he wants to show that Malaysia is going to be prudent, and that we saw the inflation numbers come out today. They were relatively good. I think it was the lowest for about 6 or 7 months. And so in terms of inflation, I think that is relatively under control. And the budget-wise, I think he's going to be more targeted in terms of the subsidies for vulnerable groups in Malaysia. But at the same time, he is very mindful that he can't afford a huge fiscal deficit, and he can't really afford to have that debt to GDP rise too fast. But at the same time, the Malaysian economy is growing. So even if the debt were to be a little bit higher, I think the GDP is going to take care of itself. And so the debt to GDP could remain round about sort of below 70%, Brian.
Now, David, final question. You had an article in Channel News Asia in your commentary after the Singapore budget around what citizens should do to ensure a low tax environment. That sounds almost counterintuitive. Tell us about that and what your thoughts are around this conversation.
Well, I did have a look at the budget. I followed it fairly closely. And what I noticed was that, yes, Singapore has a small budget deficit, but that deficit was primarily for helping the vulnerable groups, helping the older citizens here in Singapore. And so the government felt it was necessary to subsidize those people to some extent. And then I thought to myself, what if they didn't require subsidies? What if everybody was going to be okay? And we know we're living in an aging population environment. People are going to be living longer, and people are going to require a lot more in terms of their retirement. So what I think is, if people were more responsible. I'm not saying people are irresponsible, but I think that if people were more responsible and the vulnerable group of people was not as large as it can be, then it means that the governments don't really need to help as many people in the future. So people always complain about income tax. They say, they don't really want income tax to go any higher. And I can understand that. But in order to achieve that, you need to help the government as well. You need to ensure that the government doesn't have a fiscal deficit. And the only way that you can do that is to be responsible. So if today's cohorts or today's younger people don't require any subsidies in 20, 30 years' time, then of course, the government can then use the income tax for other purposes rather than to help those vulnerable people. So that really was the gist of that. I think we all need to take charge of our own finances to some extent and be responsible for ourselves. And if we want to live in a low income tax environment, then we need to make sure that the government doesn't need to help us when we get older. That was really the gist of that article, Brian.
The challenge, however, David, is actually the following. Many of the older Singaporeans and the more vulnerable Singaporeans grew up in an environment and saved and invested in an environment where the costs were completely different from today. They never had the sort of incomes that were necessary to sustain life in a high income Singapore because their the economic situation of Singapore when they were in their productive years was very similar to many of Singapore's poorer neighbors. So I think that's the challenge then that the government is grappling with in order to ensure a more equitable Singapore.
I totally agree with you. I like your counter argument. And of course, we can't blame the people that are in that vulnerable situation at the moment. But what I'm saying is that it is better to be safe than sorry. And we are where we are at the moment. So consequently, the government has to help those people. But we need to throw forward by another 10, 20, or 30 years' time. And we need to make sure that, yes, whatever savings we put to one side, you have to ask yourself, will that be sufficient for me to retire on? And if the answer is no, and factor in inflation, put some kind of guesstimate as to what you think the inflation rate is going to be over the next 10 or 20 years, and be realistic, because the only people you fool will be yourself. If you're going to put an inflation rate of 2% in your calculations, and you say that this is what I'm likely to need in 20 years' time, you put an inflation rate of 2% in, then you may find that when that time comes, you're not going to have enough money. So put in something like 5% inflation rate. Well, if inflation does go up to 5% and it stays that way for a long time, then you'll be okay. But the only person you'll be fooling if you actually put a lower inflation rate in is yourself, because you are the person that is going to be relying on that pot of money later on. So that's all I'm saying. Just be prudent, just be careful. The Singapore government is being prudent, and I think the Anwar administration will also be prudent, because they know that they just can't keep on taxing people. They just can't keep on drawing on the reserves, and they certainly can't afford a huge debt to GDP number.
Now, David, on that note, and we can have a far longer conversation about this on another show. Thank you very much for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor in Singapore, on BizTech's Asian Midday Market Watch, powered by Austral Asset Management. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.